So everybody that is in the state of California is bought their insurance from, let's say, Allstate or whoever the insurer in that state is the dominant player. And they're going out there and they're pooling all of those premiums together with the anticipation that they're going to be able to just pay a portion of those out on claims, and the rest of it's going to be invested and go into other projects, go into the stock market. A lot of development gets financed by insurance companies. So if you go in, you find that there's new 100 development home that's being built, it's very likely there's an insurance company that put some money into that, which was money that came in from the premiums. So when you have too many losses, now what you're having to deal with is say, okay, well, everybody's in zip code 90120 no longer can get insurance because that area has too much wildfire risk. So no one gets insurance. Now, you may have a house that would be resistive to that would qualify as being a fire resistant house, but you can't get insurance because you're lumped into where all 200 houses in that area are. So one of the things that we were thought about when we started engineering this is that how do you identify what each home actually is? How do you bring granularity to the insurance underwriter who can say, oh, well, there's 200 houses in this zip code, but these 50 I can actually write. So now I've got 50 more premiums going into the risk pool. And that was, I guess, one of our big goals was to educate the insurance company as to what actually sits on the property, which is where, of course, the AI kind of comes into that. And I can kind of expand on that more here in a minute. But when you look at the fact that 3 years ago, most of these insurance companies were just basically, getting creamed in the sense that their claims were grossly exceeding what their premiums were. And if for the next kind of stage, and we were talking reinsurance, that you brought that up earlier, that's where an insurance company buys an insurance policy from another insurance policy, most of which are in Switzerland, I might add, so they're insuring their own portfolios. Well, those guys, they got creamed, with how I think it was, I don't know if it was Helena or the one of the hurricanes before that, but so the reinsurance people, they're not stupid. So they were saying, we got to raise your rates. So when they raise their rates, that goes downstream to your insurance company. They're basically saying, okay, I'm going to have to go up 40% on what your premium is, or where you happen to be is going to be so much of an increase, you're not going to be able to afford to pay it. And so we're not going to write a contract at all. So, and that's kind of what we're sitting with right now. And that is that you're either uninsurable because you're lumped into a whole area, and they don't really have any idea how to grade that out into insurables and uninsurables. It's just safer from them to just say none of the above, and so they don't do anything. And of course, the reinsurance companies, they keep raising their rates as the climate continues to warm the oceans and cause these mega storms, which I always tell people that I said, who would have ever thought you were going to have a hurricane in Asheville, North Carolina? Okay. Just doesn't seem really too probable because it's right there smack in the middle of the mountains. But the Hurricane Helene came right on up there, and they're still trying to rebuild from that. I feel sorry for those people because they're not getting.
I mean, you made a lot of great points, Ben. I think the main point there was just information asymmetry between where we need to be and where the marketplace is going. When I say the risk marketplace, and then there's also the ability to educate the insured on what they need to do to harden their home. I think that's one of the other confusions that people have is like, well, Dalton's company is saying that I can't get insurance from them, but then it's also not necessarily super clear. There are rules and regulations depending on where you're operating in different marketplace, if it's admitted or non-admitted. Without getting into too much detail, admitted is very regulated, non-admitted is less regulated, but there are some less guarantees and normally has less coverage. But,
a lot less coverage.
Yeah. But if you are in that situation and you don't necessarily know, hey, Dalton said no to covering my home, the home that I've got a 30-year mortgage for, the home that were my family. I want to raise my family.
Hmm.
What
In my
then? Like,
neighborhood.
yeah,
Yeah.
where
Yeah.
where where do you go at that point? And I know that you guys are working on or have a solution that helps educate the insured. And I think that's also an important point because it's like,
We
okay, now we
really,
have a problem.
yeah,
Where's
yeah,
the
we
where's
do.
this where's the direction